Good morning. This morning we're talking about NRW Holdings. NWH on the is the ASX ticker code. It can sometimes prove confusing. Here is the long-term chart, unadorned. So partly, or one of the interesting things about this particular chart is that many of the stocks that I recommend have a very consistent, straight up history. Not all stocks will do that. And you can see here that this period of time seems to have had an effect on the management because since 2016 the stock trajectory has essentially been consistently up and to the right. So as usual, here is the ChatGPT script that I asked it to produce, talking about NRW Holdings and the elements of the stock situation that are relevant to whether or not you buy the stock today. I'm going to be talking less and less about the ChatGPT script. It's simply here if you want to compare what ChatGPT has to say to what I have to say. You can simply pause the video and read it at your leisure. Now, here is the relevant period of the stock's history from 2016 with the trend line that I've drawn in, trying to be as fair as possible. You can see that the stock easily overcame the COVID setback and the supply chain chaos in the aftermath of COVID, and then returned to a pattern of growth which was essentially parallel to the growth pre-COVID. This sort of resilience is what you're looking for in a stock. As I say, the market has spoken on NWH, and as always, the question is, if a stock has been growing consistently for years, what is it that would make you think that that might change? And here is the closer analysis, focused on the MACD, supported by the simple moving average ribbon of the 20, 50, 100 and 200 day simple moving averages that you see up here. Now, one of the things I've consistently spoken about since I started these videos are these cliff drop events. It's not such an enormous event here that I would call it a cliff drop. Normally a cliff drop needs to be more than 10%, but I suppose that it's indicative, and it also gives me the opportunity to point out again the different levels of buy point. Don't know if levels is the right word, but what I'm suggesting is that whereas using the MACD as a primary indicator, this is the buy point when the signal line is just about to cross through the MACD line, and when these the words gone right out of my head, when these indicators are about to go positive, showing the crossover of the two lines, that's the first buy point. The second buy point is that indicated by the price action line cutting vertically above the 20-day moving average line, which is this buy point here. So this is the first buy point, that's the most risky. Second buy point, less risky, and on and on. So here are the fundamentals of the company. Straight fundamentals, market cap, it's a real company worth $1.5 billion. PE ratio under 15, so that's very good. Dividend yield 5%, that's very good. Debt to equity 50%, not so great, but not so bad. The nature of the company is that it is a a genuine company being essentially a company which supports everything to do with mining, infrastructure services, stuff like that. The point I'm making here is that the majority of conventional investment advice is fairly lame. When you're looking at the fundamentals, I suggest you don't spend a whole lot of time agonising about whether or not you've got it right, because these are billion-dollar companies which have large teams of people working to address the fundamentals of the company on a daily basis. What some guy who is analysing this stock amongst many thinks that he can contribute to the understanding of investors as to the fundamentals of the company above and beyond what the company is actually producing escapes me. But here is the significant point about NWH. Now, I did a video about NWH earlier. It was my second video. I am gradually trying to produce it to improve everything about these videos, including the production standards. I plugged in my swanky Blue Yeti microphone, didn't manage to actually connect it so that it would record, and I only realised sometimes later that I had published the video on NRW Holdings with no sound. I'm hoping that it was sufficiently clear in terms of the graphics that those who watched it, there weren't many, could actually make sense of it. But I thought here, with this trading halt, I had the perfect opportunity to redo the video and make the same point. And the trading halt has certainly given investors an opportunity to take advantage of the opportunity that I perceived with NRW Holdings a couple of weeks ago. Now, one of the things that I'm doing in using ChatGPT to generate these parallel scripts that I put up in the videos is to encourage people to use AI as a tool. It is a tool, and I tend to think that people who think it's more than a tool are tools themselves. This is simply what a Google search will throw up now through Google's use of AI. And this is what I had Google throw up with regard to the announcement that NRW Holdings is going to make regarding its contract with SIMEC Mining. Use it as a tool. There's a difference between making decisions based on artificial intelligence and using artificial intelligence to do the research that you don't have the time to do. For me, this is what a lot of judgment comes down to: your knowledge of the company in terms of really fundamental elements. For me, the company's been going for 30 years. That must say something. Everything about this channel is meant to encourage investors to choose stocks which they see as having a long future or path of growth, to take advantage of that. Certainly past performance is no necessary indicator of what's going to happen in the future, but that's something conventional analysts say to try and hedge their bets. For me, I can't see past success as being anything other than an indicator of probable future success. Okay, here is some of the media commentary around the trading halt and the reasons for it. And the interesting thing about this Google search is that it threw up the original reporting of the original contract that is now being reviewed. So the question is, what do we think is going to happen? Do we think NRW is holding up this announcement because it's going to lose a contract, or do we think NRW is holding up this contract so everyone pays attention? Certainly, since I've started analysing stocks closely, I think that some companies use trading halts primarily for dramatic effect. So here is a relevant example. This happened last Friday. This is the way stocks can move. This was related because Domain Holdings Group is the primary competitor to realestate.com.au. DHG went up. REA, for no other apparent reason, came crashing down. So what do we expect once the trading halt finishes on NRW Holdings? Is it going to skyrocket up, or is it going to crash down? And again, coming back to the theme of only investing in quality stocks, the question you might ask yourself is, does this crash in the price of REA affect your long-term decisions about whether or not you invest in REA? If you had invested in REA here at this point in anticipation of future growth, not having, as no one did, any inkling that DHG was about to spike, would you think this was a catastrophe, or would you simply buy more stocks down here? This is the point of investing in high quality stocks, and only in high quality stocks. Setbacks are temporal. So once again, here is the big picture. Here is the trend line, which I suggest is significant. Here is the 200-day moving average, which I suggest is significant. When you are assessing a stock as to whether or not you are going to invest in it, the whole history of the stock is relevant. Question here is, NRW Holdings reached an all-time high back in 2012, slightly above $4. It has recently come very close to that all-time high. In terms of whether or not you invest in NWH today, surely one of the questions is, do you think today that NWH has seen its all-time high forever and that the stock will never go above $4? If you think that, act on that. If you think that's unlikely, then probably it is. And here's the disclaimer.